Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bureau. Today is Thursday, October 22nd. Hey, today's kind of the last remaining day for economic news release is scheduled for this week. Tomorrow there won't be anything, so it'll be kind of more on the earnings reports tomorrow. But today we have the weekly jobless claims. So we had 256,000 people apply for last week we had 256,000 people apply for unemployment. It's supposed to jump up to 265. And it's still down below the 260 level at 259. Now these are good levels right now. Actually, these are probably the best levels we've had since like 42 years, I think it was one of the reportings I saw. So these are good weekly jobless claims here, numbers that we're seeing here. FHFA home price, these are one of the price indexes for appreciation. The previous reporting back in July, we had 5.8 year-over-year increase in home prices. In August, it dipped a little bit down to 5.5% year-over-year. Now, typically the market, as we know, usually starts slowing down around August as we start getting into the kids going back to school and stuff, and a lot of families stop looking for homes at that price. So that could be a good indicator right there. But home prices are still going up, which is the good news. Another good news, existing home sales so for the month of September. So back in, as we see back in August, we had 5.3 million. And the forecast was supposed to have a slight uptick to 5.34, and it jumped out to 5.55 million. So very good numbers there. Existing home sales still showing strong numbers in the real estate. Leading indicators, on the other hand, is showing some negative numbers. Obviously, we had back in August 0, which shows definitely nothing, and then we saw a little contraction at negative 0.2%. These kind of give us economic, it kind of gives us a forecast of where the economy is kind of moving, and this kind of like our crystal ball in a sense, and that's obviously not too good, negative 0.2%. So we'll kind of have to wait and see. I don't really anticipate a whole lot of growth by the end of this year, primarily because being here in Southern California, I have a lot of friends who are longshoremen, and typically their busy season it was about 2 months ago, and that's usually the shipments that come over for Christmas orders, and they really didn't have anything. Usually they're working a lot of overtime, and it was just normal hours. So I don't really anticipate. I kind of forecast my projections would be kind of going forward, Christmas time, retail sales will probably be closer to what we've seen the last year or two on the other side. So I don't expect much growth in that area. That's my 2 cents. Stock market's up quite a bit today. Actually, the Dow's up over 200 so far this morning, and a lot of it has to do with we got earnings reports. We also got some big ones, so that'll probably go into tomorrow's reportings. We got some big ones coming in after hours, so you'll see that probably coming in tomorrow. But one of the big ones, of course, is ECB, is European Central Bank, hints of more stimulus to come to try to stimulate their economy in Europe. So, of course, the investors are loving this. This is kind of like giving crack to a tweaker, basically, when you start seeing stimulus packages. We got the bond market. Bond market, as you see, we see that little tail. We did test basically 25-day moving average came up. We're up currently about 12 basis points from where we left off. Now these are kind of levels where we're at. These are kind of the highs we're seeing, and with forecasts, the numbers we're getting, we're not getting anything that could really push us above the next resistance level. So I'd be very cautious if you're kind of floating around trying to see if you can get better rates. I would try to lock in now because these are probably going to be the best you're going to see for a little while, short-term wise. Long-term, it's hard to say what we might see. Maybe the Fed does decide to raise rates in December, which could help out the bond market, and as the stock market probably tanks, or vice versa. So this is I would if you're floating around with interest rates, I would kind of lock in at this point, as these are kind of the best we're seeing right now for a while. All right, have a great day, folks. Sorry for it took a little longer than normal, but tomorrow should be short and sweet as we don't have any economic news releases scheduled. All right, have a wonderful day. Thanks so much for watching. We'll see you tomorrow. Bye.